The stock market will crash on this day in June. And over the next 15 minutes, I'm going to tell you exactly why I'm 50% cash in the trading side of my portfolio and why you need to be very, very, very careful chasing tech/semis at this level. But before we do, I'd like to say congratulations, ladies and gentlemen, to those of you that followed my lead in SRFM. I gave it to you for free on this channel at 110 a few weeks ago. We bought it all the way down left side of the screen to 103, which was in fact an all-time low. And if you're pulling the ripcord along with the peacocks right now, that's at least a 20+% profit inside of a month. If you want to carry it through May 11th, which are their earnings, there is a chance it could push a little bit higher. But if it's me, I take at least a third to a half off the table right now. All right, folks, how many more winners do I have to give you before you click that pinned comment below? As a matter of fact, this is my last video for a while. I'm 50% cash, and I'm going to give you a chance to sign up over the next 4 or 5 days, $20, cancel anytime. You want to know where that money's going? It's very rare for me to have that much cash, and I'll explain exactly why a certain day in June is likely to be significant downside pressure throughout the rest of the summer for the stock market. But don't wait until I put all that money to work. I'm buying 3 stocks today. I'm going to have 2 more new ones on Monday or Tuesday. It's $20 to get started, cancel anytime. We average 10 wins a month, 20 for every loss. So in your first 60 days, you might see upwards of 20 wins and 1 loss. That's called stacking cash. That's triple-digit returns. We're 118-5 since last August for more than 700% return. And if you join me in September of 23, you've made over 21 times on your money. I mean, for crying out loud. God bless each and every one of you that has followed me, stuck with me, given me a chance to help you and your family not only make money, but get fucking rich in the greatest secular bull market in human history. In 2017, I started saying flying cars and trips to fucking Mars. The NASDAQ's up 500%. Since then, it'll be up another 5, 6, 700% by the time it's all over and we have the crash of a lifetime in 2035 when the demographics roll over like they did in March 2000. This is 1991 all over again. Back then, it was the boomers being driven by the internet that Al Gore invented, and it was another 9 years of plus 700% from the low in 91 to the peak in March of 2000. And then when the boomers started to exit their peak earning years and that bubble burst, all hell broke loose. That was a real bear market that lasted 3 years until the bottom in October of 2002. And from top to bottom, the NASDAQ was down 89%, very similar, to be exact, to the 1929 crash, which didn't bottom until the fall of 1932. And the Dow back then was down exactly 89% as well. So every pullback, every fake bear market like the trade war last year, every mini war like this one that we just had needs to be bought. I will help you from panicking at the lows, or in this case, getting all FOMO'd the fuck up at the highs. So when this video is over, excuse me, sorry, Mom. Make sure you click that pinned comment below and get started for $20. Cancel anytime. All right, back to the charts we go. QQQ. Dancing at 693 or thereabouts last I looked. Yeah, there we are. Is there anything as we look at a 5-minute chart wrong with that? Absolutely not. But you do have 2 giant gaps. You've got a gap down to 683 and another gap down to 673. But in terms of distribution, in terms of that short-term chart showing any signs of institutional selling, is it there? No. But therein lies the danger as I go back to the 12-month chart. We've had 2 of the last 3 days being the lightest volume of the entire year. The Qs, as of production of this video, have only traded 36 million, and it's after, to be exact, it's 1:50 in the afternoon. Normal daily volume is about 62 million. Same thing yesterday. So what does it mean? What does it mean when we have markets hitting new highs on half to at most 2/3 normal daily volume? It means the institutions are not participating. The two drivers of this rally are short sellers that are being forced to cover. There's a few hedge funds that are in trouble. They might, in fact, need a bailout from the government, AKA, well, they're not actually aligned to the Fed. Remember October of 1998 when the long-term capital crisis, which was a foreign hedge fund, blew up? The NASDAQ dropped 40%. We're not going down anywhere near that, but when I give you a date to be exact, and you'll understand why, in June, you better be careful. But when I go back to these charts, we've got multiple gaps. There's a giant one right there, down to 590. And then, of course, you got another one right there. But the most interesting scenario is with the semis. And that's what the ETFs are doing. The institutions are not buying. If you see CNBC, they're all coming out and going, well, this has exceeded our price target. Well, we're a little bit out over our skis, and don't go anywhere. Because I'm going to tell you exactly how dirty this game is played. I was on Wall Street. I'm going to tell you exactly what's going to happen the first week of June. So don't go anywhere. But with respect to the SMH, and she was dancing, go to the 5-minute chart, extended version. Yeah, I do use Yahoo Finance. I'm a fucking dinosaur. Anytime I've ever traded, to go back to TradingView or some other platform, this voice in my head says, what are you doing? What are you doing? You got a 95 or 6% win rate in the last 9 months. Don't fucking change a thing. If they're going to laugh at you, let them laugh at you. But we were at 546 on the SMH. Is there anything wrong with that chart? No, but we do have multiple gaps. Boom. Another smaller one there and a huge one there. But we ate up. As I go back to the 5-minute chart, these stocks were getting whacked. We were all the way down at the open at 532. We're now up $12. We're dancing a point or two from an all-time high. That's called power. That's called strength. That's called panic buying. But when I show you individual stocks, look at this Micron. Going out to the monthly chart. This is silver 2.0. Ladies and gentlemen, as I've said numerous times, and give me a thumbs up and subscribe if you appreciate these screen shares. I did my first one a week ago. You're talking 6 years of videos without any screen shares. Now I'm pouring out my heart and my soul to help you understand why the market works the way it does, why this is, in fact, not only a nasty overbought condition that's ripe for a pullback, but it's the greatest secular bull of all time. The semis are telling you that. But when you see Micron insanely far away from home base, which is that red line right there at 132.82, that's the 50-period moving average on the monthly. And as I explained to the team inside the Discord this morning, anytime in the past, like right here, that you get 50 to 100% above that red line, you come back. You're above, you come back. You're above, you come back. You're above, you come back. You're way above right here at 103%, you come back. Ladies and gentlemen, Micron is 4 to 5x above home base. It has never been anywhere remotely close to that overbought. And we're about to have what's called an earnings vacuum once we get into June. They're all going to have reported. These last 50 to 100 point plus melt ups are adjusting to the numbers that were just released. Mark my fucking word, this is going to happen the first week of June. May I? If you've been watching some of the analysts that have come on in the last few days of CNBC, they're flabbergasted. They're blown away. They can't believe what they're seeing in the chip space. A lot of it is being driven by the market is worried that Taiwan Semi, the leader, and NVIDIA, which reports May the 20th, are not going to be able to make enough chips to satisfy AI demand. These data centers are blowing up all over the world, and even though they're getting some pushback, it's unstoppable. And as I said earlier in this video, it's 1991. The internet that Al Gore invented, and yeah, that's kind of a joke, but do your research. It was only a few years old at that point. It still had another 9 years of maturity. AI is the same way. Not you, not I were talking about AI a few years ago. It's in the early stages, but these stocks that I'm showing you right now, they're just insanely overbought. Anyone who's a technician and honest with him or herself will tell you, at a minimum, we've got to stop right fucking here. And when I go to the line chart, which is based on a closing basis, you really don't have support in Micron until you get all the way down to 417. Am I saying that's going to happen immediately? No. But, and I will give you the date, starting in June, July, and August in a midterm year. If we get a rug pull, if we get the first week of June, what I think is going to be a number of downgrades, they're going to let you celebrate NVIDIA May 20th. That'll be the final fucking nail in the coffin. If we push up and through 700 on the Qs, let's call it up and through 550, 560 on the SMH. And then when they come back from their fucking cocktails in Martha's Vineyard and Nantucket, they're all going to get together after they built a massive short position. And they're going to start coming on CNBC one after another. And they're going to say, look, we're huge believers in the AI revolution. The demand for compute is through the roof. But these stocks are way out over their skis. They need to cool off. They won't lower their price targets not one fucking bit. But the minute they go from strong buy to buy or buy to, dare I say, neutral, look out below. Why are they doing that? Well, two reasons. They're caught short and they need the stocks lower, but they're building more short as we speak, not only in the stocks, but in the futures and options market. And second, and perhaps most importantly, in a midterm year, they know the summer is typically weak. They're going to want you to panic and sell your Micron, your Intel, your AMD, etc. And then in the fall, probably after the election in November, mark my fucking word, the same assholes that downgraded the chip stocks in June are going to upgrade them. Why? Because they want you, the dumb retail idiots, the ones they look at as nothing more than liquidity, to buy what they're going to fucking load up on this summer. Whenever they tell you, don't buy this or we're downgrading that, they want you to sell, either to cover a short or they want to try to accumulate. And when they turn around 3 to 6 months later, generally, and they upgrade the same fucking stock that did not change much, if at all, fundamentally, they want you to buy what you sold them 3, 4, 5 months before. Folks, in closing, I know how this game is played. Anyone who's honest, this melt up is way overdone. You've got stocks like Intel growing at 7.5% on the top line. 4 months ago, needed a bailout basically from Trump at $19 because they were openly talking about Chapter 11. Where is that motherfucker right now? INTC. Let's go back to the chart, shall we? 110. Let's go back to the candles, see if they gave up any of the goose this morning. Not really. Going to the 5-minute chart. Well, kinda. So it got up to 117 in the pre-market, fell all the way down to 106. Is it going back up and through 117? Maybe, but it's going to require an NVIDIA beat and raise on the 20th. But again, when I go out to the monthly chart on Intel, way down here was Chapter 11. They're not growing anywhere near what it's going to require to maintain this valuation, which is an all-time high. How the fuck does a stock go up 5x when you're only growing top-line revenue at 7.5%? What I said earlier, the market is concerned that the two major players, Taiwan Semi and NVIDIA, are not going to be able to cover chip demand. So they're looking at fucking has-been companies like Intel, asking them to pivot in an area that they're not even an expert in. Ladies and gentlemen, I'm not telling you to blow out all your chip stocks. If you bought them for a trade, yeah, you got to take some off the table. But if you're in there for an investment and it's for your retirement, as myself, I'm not selling the Qs that I bought weeks ago that are up $140, but I am telling myself and members of the team, which you might be one, we got to expect a bit of a pause, a fucking rug pull. So the date that you need to be on the lookout for is June 15th, Monday. Why? Redemptions. You may have heard, and I appreciate you sticking with me in what is somewhat of a longer video. Companies like BlackRock, Blue Owl, Apollo, all these private investments, many of which are related to software. Software stocks have been cut in half. So all those executives, even though they're doing a little bit better, that were giving out massive loans, because that's what they do to Wall Street fat cats, they're now a credit risk. Their net worth, to keep it simple, stupid, has been cut in half. So they're telling accredited investors, you can't get your money out yet. But generally, 2 weeks before the end of a month, June 30, aka June 15th, you're going to be screaming and fucking hollering. And by that time, they're going to have lawyers demanding they get access to that money. What does that mean? More supply is going to hit the market. And that's going to be preceded, in my opinion, that first week or thereabouts, with a number of significant downgrades in the chip sector. But hey, the fuck do I know? Why would anybody listen to me? I've got nearly 475 wins against only 24 losses for nearly 2,200% return in 3 years. I'm 118-5 since last August, cranking out a 96% win rate, trying to give you a chance to join us $20 to get started. Your first 2 months, cancel anytime. And until next time, always remember that I love you and I really appreciate you watching.